Hey folks, today's video is a juicy one and you'll definitely want to stick around till the end. We are diving into how you can turn 87 bucks into some serious dough. Plus, we'll get into different ways of approaching trades with the same set of indicators. But first, if you haven't already, hit up my Telegram channel, links in the description. I'm live there daily, answering your questions and hooking you up with a link to register on Pocket option. Registering through that link gets you a sweet 50% bonus on your deposit. Enough to chat! Okay, let's kick it off. I'm diving into our first trade with $87, betting on the euro-dollar pair to go up. Now you might be wondering why. First thing that jumps out. The chart's nudging up against a resistance level. It tried breaking through before, but no dice. Bounced right back and started a slow climb, doing the whole zigzag dance with the price range. The climb was chill, no crazy spikes, tell us that it was not so much about the buyers being all gung-ho, but more about sellers not putting on the pressure. Check out the low vibes on the MACD indicator too, both in the bars and the lines twirling around each other. Oh, our buddy is stochastic? Or as it nears the resistance level, it's stepping out of the oversold zone. So, my 2 cents? The chart doesn't have the mojo to bust through the level, a bounce back's coming. Hence, I went for a draw. Bingo! We made some cash! Let's throw it back in, up the ante and increase our stake. Next up, we've got the Euro-Swiss franc pair. Here, my gut's telling me it's on the rise, so I'm going for a call option. Peep the chart, price is causing up to a local support level after bouncing off from resistance earlier on. But the trend's still looking up, you can see it with the moving average set at 60 periods, so I'm thinking this dip's just a breather. Now the trick is to figure out when this chill out phase ends. Alright, let's dig deeper into those indicators. By looking at the green bars on the MACD histogram, we can see the lines are getting chummy and closing in. Stochastics hinting at a rise too, its lines have just left the too cold oversold area. Man, our prediction was spot on, a big juicy green candle is hugging the resistance level and the next one punches right through. That little play added 312 bucks to our pot. Let's keep this party going. Now, peeping at the British pound Aussie dollar pair, I'm betting on a price jump. Pretty straightforward stuff here, but let's break it down. So we are looking at an upward trend. After a minor dip, the price is inching up to a local support level. Usually, unless there is some roadblock, the price will bounce back from this support level, so betting on the rise makes a ton of sense. Indicator signals, they are backing up our hunch. MACD lines are crossing paths and stochastic lines are getting out of the cold zone. So yeah, a rise felt like a sure bet. Just looking at the way all these lines are growing, you'd say the rate's bound to climb. Master the whole support and resistance level trading strategy, and binary options trading ain't all that mysterious or tough. Wow, our honest day's win! $584 sitting pretty in the account. Alright, let's scout out another trading opportunity. I'm back with the Euro-Swiss franc pair and betting on another rise. Let me spill the beans on why. Remember those levels I marked out earlier? The chart pushed away from the resistance and the price took a nosedive. It's a pretty steep drop, but going by the blue SMA line, we are still on an upward trend even though there is a hint of a U-turn. Post-nose dive, the price chilled at a support level, one I spotted from the chart's old moves. Now, after chilling, prices either slide further or rise. Let's scope out our indicators to guess which way the wind's blowing. Both indicators are flashing go up, and that's why I decided to roll with the rise. And boom, I nailed it! That move added a whopping $1,098 to my stash. Let's go big and max out our investment. On pocket options, that's a cool grant. Switching gears to the euro-dollar pair, and here I'm taking a bullish stance. Honestly, you can navigate the market even without any indicators. By mastering candlestick patterns, you can end up with successful trades. This moment is the perfect showcase of that. We are seeing a gentle, predictable dip in the price up to a certain level. This drop is capped off by a candle known as an inverted or hanging hammer, whichever you prefer. The main thing is this is a market reversal signal. This same signal gets a nod from the MACD indicator. Those green bars show the lines coming together. But just by eyeballing the candles, you could have called the rise. Of course, the predicted uptrend might not play out despite my assurances, but lo and behold, the forecast was spot on. Wallets now heavier by $1,998. I suggest we stay with this pair and watch the chart. My event prediction worked out, but not in full. It's okay, the strong price upstick I was gunning for has not hit yet. This means we've got a window to wait for the right signal and replay our move. Might also be wise to extend the expiration time to 2 minutes to dodge any random price tweaks. Taking another bullish stance. Basically, as I mentioned earlier, the reasons for diving in remain the same, but let's dig into some additional cues that nudged me to make this move right now. Near the support level, we spot the price chilling out. For the past 7 minutes, it's been swaying within a tight lane. Take a look at the MACD. Its lines are almost intersecting now. By observing the bars on the indicator, we can tell that for the past 5 candles, there's been a convergence, but the low volatility is hampering the process. Additionally, we notice the stochastic accelerator gradually but surely departing from the oversold zone, which also hints at a potential price increase in the near term. Last time I jumped the gun a bit with my trade entry. It was a gamble if you aim to cut down risks and boost the quality of your trades, prioritizing quality over quantity. I'd advise adopting a more cautious strategy and waiting for clearer signals with longer expiration times. I walk you through 2 different approaches using the same strategy. Which best to tread? That's up to you. It hinges on your temperament and market intuition. And experience, of course. Rookies would do well to take it slow to prevent burning through the deposit and, crucially, to not get disheartened right out of the gate. The market's lethargic to the point that even a 2-minute expiration might not cut it. Things are moving at a snail's pace, even though we can spot the amplification of the signals previously identified via the indicators. Only now is the anticipated movement coming into play. This time around, my calculations were spot on and the trade has added 2,832 to my account. Friends, today's trading session was a challenging one with a dramatic climax, but in my opinion it was also quite enlightening. You've seen how using the same set of indicators can lead to different trade execution strategies. Strategy is not just about indicators, but also a holistic grasp of the market. It's crucial to master the art of comprehensive situation analysis. For more insights into strategies and market dynamics, do subscribe to my Telegram channel. We interact extensively there, sharing experience, strategies, and signals which you can leverage in real time. To ease your trading initiation, I'll be sharing a registration link for pocket option on my Telegram channel, which instantly grants you a 50% bonus on your deposit. Find the link in the description, and of course please subscribe to my YouTube channel, catch up with previous reviews and hit that bell icon to stay updated. I've thoroughly enjoyed our time together today. I hope you did too. Looking forward to our next video. Until then, goodbye.